He's been called a traitor, a philosopher, a prophet, and an economist. He predicted the financial crisis and says we've learned nothing from the experience. He's the author of Fooled by Randomness and the Black Swan. He has little but scorn for the media and says he doesn't bother listening to journalist questions, but he's here anyway. He's Nassim Taleb, and we're glad to have him. Nassim, a lot of questions to ask you, but let's start with this because this has been in the news lately, and I just have to address it. This trade conducted by a hedge fund firm that you advise, Universa Investments, last week, attributed, at least by the Wall Street Journal, for part of the cause of last week's so-called flash crash. We're talking about 50,000 put options here with a value of $7.5 million with an M in the middle of a market meltdown that cost exchanges something in the order of $1 trillion in market value. How can we possibly reconcile those two events?
First, I'm answering, this question because you're asking, but I have absolutely no idea what Universa did, and I'm not connected, so so I cannot provide an answer as the Nassim that's connected to Universa. Okay. However, I can answer one. I'm going to give you an explanation that's in the book. Is that when a bridge collapses, you don't look at the last truck that was on it. You look at the engineer, right? You go look for structural
signs of wear and tear, structural flaws.
Yeah, exactly. So this is the only thing I can say is that you're focusing on me for two wrong reasons. The first one, my connection to Universa doesn't give me that information, and the second one is that you're looking for the straw that broke the camel's back, all right? Let's not worry about the straw.
Maybe there was something wrong with the camel.
Focus on the back, exactly.
All right. Look, I'm not trying to be accusatory about it. Okay. It's just that I can't ignore the fact that Universa was linked to this trade. You advise Universa, that's all. So we've gotten that out of the way. Okay, I understand how you feel.
Now we can talk about more important things.
Yeah. I'm sure.
But, yeah.
So let's talk about for a moment this. You became famous effectively for predicting the financial crisis in your book, The Black Swan, but in the new section that you've added, an essay at the back of the book, the paperback edition, you say, and I found this quite surprising, that the crisis of 2008 wasn't a Black Swan event.
Yes.
Explain that.
A black swan is something that depends on the observer, okay? For a terrorist, 9/11 was not a black swan. For someone in the towers, it was a black swan. So when the thing for the turkey, you see, Thanksgiving is a black swan, but not for the butcher. So my idea, I don't hold the risk management, by banks and the economic theories in high respect. So I think they create fragility, and I had detected fragility in the banking system and fragility in a lot of areas of economic activities that were undetected. Continuing from there, the same fragility still there, okay? It persists. We need to do something about it. I think we wasted a couple of years since the meltdown, almost a couple of years since subprime and the meltdown. We wasted a couple of years, and the risks, in fact, have increased. So the same fragility I detected when I wrote The Black Swan about accumulation of hidden risks has increased. And it has taken a much more vicious form. And this is what I'm worried about, not what happens on a Thursday in Chicago, right?
Okay, so we have about 60 seconds to go until we have to take a quick break. Then we'll continue the conversation. But is that what you mean when you say we've effectively learned nothing from our experience in the crisis?
Yeah, people learn specific causes, don't learn structural problems. And in fact, the system was becoming very fragile for two reasons. Number one, a lot more theories, okay, that have absolutely no empirical evidence have been used by the economic establishment for some strange reasons, sort of like a sucker's game. And the second one, the world, because of globalization, became vastly more interconnected and hence vastly less predictable.
Less predictable.
Less predictable. You have the degradation of predictability that has been exacerbated by the internet and world trade.
Nassim, well, everybody, all the policymakers down in Washington are patting themselves on the back for saving the system. They did anything but, in your mind.
Yeah, exactly. The reason we had this economic collapse was, as I said, built up of hidden risks, mostly in the form of debt. Today, we've transformed private debt into public debt. We have increased moral hazard. I mean, look at the banking system. It's like a spat in our face. They made all this money with our backing. We've increased moral hazard, and we are now depending on, we have a lower tax base because fewer people employed than we did 2 years ago, and you depend on economic forecasting by governments. The Obama administration is forecasting, say, between 4 and 7 trillion, depending on parameters. But small little glitch, okay, can make that deficit for the next 10 years swell to 20 trillion.
Now, speaking of small little glitches, is that what we're seeing take place in Greece, for example, and now spreading to Spain and spreading to Portugal?
No, Greece forecasts 3% GDP, debt to GDP, and now they're at 14 and counting. And it's the same thing with the U.S. government. Okay, same thing can happen will happen to us. If you look at forecasts by government, typically they underestimate deficits, so they probably should have the discipline to shoot for surplus. But what we saw with Greece is quite telling. Number one, that it's the right solution, blood, sweat, and tears, except that no government wants it for its own people. You want it for someone else. The Germans are ready, to impose that stricture on the Greeks, but not on themselves. And of course, we look like Greece, except probably it's qualitatively the same problem we have here, except that quantitatively it's a little more mild.
Now, Nassim, I know you don't like to think of yourself as a prognosticator, in spite of the fact that you did highlight the risks, the fragility of the financial system, which led us to the collapse of 2008. Where do you think what we're seeing in Europe, where do you think it goes, and where does the debt situation here in the United States go?
Okay, here is clearer than ever. I think we're going to have, at some point, a failed auction that is going to cause severe worries. I'm extremely
a failed government debt auction specifically.
Failed government debt auction here in Greece, in the U.S., something that's going to contage. We don't have enough buyers of Treasury bonds, so the government may have to print them. So, and you know what can happen when you start printing money. Nothing happens early on, and then suddenly you wake up one day and you have something called hyperinflation, without having inflation, all right? Perception of hyperinflation. So I'm extremely worried about government debt. Long-term interest rates, and the rise in interest rates can be extremely punishing because they would like to have a little bit of inflation, and it would help everyone, real estate, the stock market. The perception of hyperinflation is going to penalize real estate in real terms. It's going to penalize the stock market, penalize companies, and nobody seems to be conscious of it. A year and a half after November 2008, the Obama administration or the Washington doesn't still realize the magnitude of the problem. That the problem was debt, and you don't cure debt with debt.
So, Nassim, who are, let's call it, the biggest fraudsters in the system right now? You are big on exposing fraudsters. Some of your favorites are Alan Greenspan, Myron Scholes, for example, Robert Rubin. Rubin and Greenspan are on the sidelines. You've helped to discredit the Black Scholes model. Who is the biggest fraudster in the system right now?
I think anybody who works for the Office of Management and Budget needs to be investigated, intellectually, to see how they're forecast in the past, because we're relying on their forecasts. The other thing is anybody who talking about stimulus doesn't quite understand. I mean, using a sample of one, the Great Depression, after we've had a lot of creative destruction. I don't want to name people, but I'm not very comfortable with Geithner out there. I'm not comfortable with the man who has a mortgage on a house not far from mine, who seemingly didn't understand risk in real estate prices. I don't want that person running the Treasury. I'm not very comfortable with Larry Summers for intellectual reasons, because he uses the wrong mathematics used in his papers, and also because he may do to us what he did to Harvard. I mean, that kind of what I call epistemic arrogance, overconfidence on forecasting. And finally, Bernanke was the one who crashed the plane. Bernanke called for a great moderation when we had a rise of hidden risk, and he's still there. So that trio is still there. It's the wrong signal. Look at Europe. Now we have Cameron. Cameron understands the problems. I don't know if he's going to do much about them.
Praise for David Cameron from
He
Nassim Taleb.
understands the problems. He knows what needs to be done. Hopefully he'll have the means to do it. And he understands the root of the problem and knows how to get out of it.
Okay. I want to get to this point. In the new essay in your book, the paperback version of The Black Swan, you say with some degree of satisfaction that it lent you some confidence to be able to view the banking system the way that you did when you had a bet against it. Here we are, post-crisis. What should investors be doing?
Okay, I'm going to give what I call negative advice, what investors should not be doing. I don't recommend that investors use long-term treasury bonds as repository of value. So if you have any long-term treasury bonds, just get out of it. Go very, very short term. Okay. The other one is that if you think that if you're European based, if you think the dollar is a good hedge against the euro or euro a good hedge, I think both are going to have the same ills. If you have perception of hyperinflation, you should have hard assets. Gold? Not real estate, something, metals, gold. I don't know which asset is going to be the most representative of the ideal portfolio, but a good collection of metals would work, or agricultural land, not speculative real estate land. And finally, I'd recommend not thinking about the stock market. You know, the stock market is has a big hoax. You know, the hype. Thing. The stock market has disappointed people, you know, making retirement plans thinking that it's going to appreciate, because over the last decade it did not. So I think that if you use the stock market as something to play with for entertainment, no more.
Okay, so no treasury bonds, no euro, no dollar, no equities, maybe real estate, possibly hard assets
not
like
real estate,
metal.
Land. Agricultural land. Agricultural land, not real estate. Real estate is, with high interest rates, may not fare well.
Okay, Nassim, we have to get to this last question.
Yeah.
People are fans of you for some of your predictive value, but more for the fact that you take a philosophical approach.
Yeah.
What, beyond that advice for investing, what should people be doing right now? Should they be going back to school? Should they be listening to what their business professors say? Does anybody understand some of the issues that you raise? Fat tails, effective risk management, fragility, complexity?
No. If you go to business school today and look at their curriculum, they teach you the wrong stuff all the time. So I suggest not to go to business school, but if you're going to go to business school, don't take any class that has equations in it. So learn accounting, computer science,
mathematics.
Law, not mathematics.
Not mathematics.
No, not what they teach you, because it's all bogus. And another thing, if you're an individual,
We have to end it there.
Yeah.
Nassim, thank you so much for joining us. Folks, Nassim Taleb here on the Inside Track.